The euro and the British pound continued to recover. Yesterday, market participants digested the ADP National Employment Report, which turned out to be rather weak. Private sector employment increased by 99,000 jobs in August, while economists were expecting a reading of 144,000. In addition, the ISM Services PMI registered 51.5%, marking a 0.1 percentage point increase compared to the July reading of 51.4%. Despite such a modest rise, the indicator remained above the 50-point mark, separating expansion from the contraction, which triggered a brief sell-off in the euro and the British pound. However, buyers quickly regained control of the market. Traders continued to add long positions on risky assets in anticipation of today's statistics that may shed light on the Federal Reserve's monetary policy plans. Friday's macroeconomic calendar includes the German Industrial Production Report, which has already been released. German industrial production fell 2.4% in July, driven by weak manufacturing activity. Eurozone employment and GDP growth data is also due out today. The euro area economy is estimated to have expanded by 0.3% quarter-on-quarter in the second quarter of 2024, in line with preliminary estimates. All eyes will be on U.S. unemployment and non-farm payrolls data. The U.S. unemployment rate is forecast to slip to 4.2% from 4.3% in July. Notably, the rate has been rising since March. Another disappointing reading could add to the Fed's challenges. Meanwhile, U.S. non-farm payrolls have been steadily decreasing since May. This time around, the indicator is expected to rise by 164,000 in August after a gain of 114,000 jobs in July, breaking a long string of declines. A downbeat report would be another reason for the U.S. Central Bank to start a long-awaited cycle of monetary easing and even deliver an aggressive 50 basis point rate cut. In this case, the euro and the British pound are expected to gain strong upside momentum in the medium term. If the data is in line with forecast, the Fed is unlikely to force events and resort to such an aggressive policy move, which could put pressure on the risky assets and support the greenback. After all, upbeat jobs numbers typically lead to a stronger dollar. Now let's move on to technical analysis. The 1-hour chart shows that the euro-dollar pair has already reached its one-week high. A decline followed by a false breakout at 1.1104 will generate a buy signal, driving the European currency up to 1.1138. If the price breaks through and tests this level from above, the euro could extend gains to 1.1171 and even 1199. This scenario is possible in the event of dismal U.S. unemployment data, which could prompt the Federal Reserve to cut its policy rate by 50 basis points. This in turn would push the euro higher. However, this seems rather unlikely. Short positions at 1.1138 and 1.1171 can be considered on the false breakout. Alternatively, if the price breaks through and 1.1104 mark and tested from below, the euro will likely slide to 1.1078 and probably 1042 as a part of a bearish correction. In case of stronger than expected data, the euro could hit a new one-week high at around 1.1012. At this level, I recommend going short on the rebound, expecting a 25-30 pip move. Going long at 1.1078, 1042 and 1.1104 will only be relevant after false breakout. Speaking of the British currency, a drop followed by a false breakout at 1.3161 will generate a buy signal, pushing sterling up to 1.3195. If the price breaks through and tests this mark from above amid weak US statistics, the pound could head for a one-month high, rising to 1.3227 and even 3260. At the level of 1.3260, it would be wise to go long on a rebound, counting on an intraday correction of 25-30 pips. Short positions at 1.3227 and 31.95 can only be opened on a false breakout. In the event of unexpectedly strong US data, if the price breaks through 1.3161 and tests it from below, the volume of short positions will increase, with sterling diving to 1.3127 and even hitting a new one-week low at 1.3088. At this mark, I recommend going long on a rebound in anticipation of a 35-40p bounce. Going long to 1.3127 and 31.61 will only be relevant in case of a false breakout. Good luck and have a nice weekend.